So I'm 24. I'm saving up for a house right now. I've got a lot of friends that are saving up for houses. There's a lot of people out there, on X or just online who are talking about how impossible it is, like we've talked about. And it's not. And I agree with you, by the way. I don't think it's impossible at all. But since you're in it and you're a financial advisor, I want to hear from you exactly what are the steps that, say, a 24-year-old like me could take from now to actually owning a house?
Perfect. That's a great question. So, what do we traditionally do? As a 24-year-old, we're going to have X amount of money that we're putting away, right? Because the banks are going to tell you you need to stash at least X amount, right, for a down payment. And so that money's sitting in an account, right? The account is not a very high interest bearing account, but it's not really doing nothing for you just sitting there. You're just trying to get to a common goal, 3%, 5%, whatever that goal is, so that you can get underwritten, get approved. But as a mortgage loan officer, my duty is going to be to tell you, look, the, the easy thing is to get an approval. I can get you approved even with 0% down and get you into a house. But is the house that you want 200,000 or 400,000, right? It's probably going to be 400,000. But if I structure it just in the way you have it now, you're only going to be able to afford a $200,000 house. So I'm going to structure you a little bit different. And I'm going to tell you like this. I'm going to say, Josh, how much money do you have in your bank account? You're going to say, well, I have 10,000. My loan officer told me if I wanted to get, a better rate and do more, I'm going to need probably 30,000, right? But it's hard for me to save 30,000 based on what I'm making, blah, blah, blah. I said, good. What if we took your 10,000 that's sitting in an interest-bearing account and we put it in an account that's going to give you a return of 3 to 10x over the next 6 months, so that by the 6th month we now have a pot of, let's say, $50 to $70,000 that we can now use to do the buy down, to get you into a $400,000 house, to get rid of mortgage insurance because you're putting 20%
Sorry,
down
can I clarify? When you say buy down, are you talking about like buying points?
Yeah, buying down the rate.
Okay, I
Right?
gotcha.
So paying a percentage that's going to take you from 6.5 to maybe 4.5 or 5%, and build that into the loan, right? In structuring the loan. See, people don't think like that because it's all cost conscious. If I'm able to put it together inside of a structure and then get the seller to pay my closing costs, then it's a wash, right? We get very creative. Sellers want to sell their homes, and it's our duties to put these things together in the way we do, so it's a benefit. My fiduciary to you, Joshua, is to get you into what you want. At the same time, the sellers want to sell, so we just got to paint the proper picture and being creative and doing it right. A lot of people don't think that way. I'm thinking different because I know I can kill two birds with one stone. We just need a little bit of compound interest in the process, and that might be 6 months. But if in 6 months I can now deliver you a $400,000 home with a loan that's only 300,000, right? That you owe, you have 100,000 that's built-in equity. You've got rid of mortgage insurance. You have the interest rate you want. Now you have a payment that is inside of your budget, right? Yet you didn't forsake having to go down to a $200,000 house. You're getting the $400,000 house, right? And I've been doing mortgages for 25 years. I'm licensed in mortgages, real estate. I'm a realsrealtors.com is our real estate company. We do this every day, right? In creative financing, right? Because we heard the pain points. We knew that people weren't making the money and we needed to find solutions. So we found a solution in putting together a structure in the way I'm laying it out for you. Does it take longer? 6 months versus now? Yes. Sometimes it's going to take you a little bit of time to get there, but if we do it right, is it well worth the wait, right? And that's how I would structure you, Josh. I would say let's look at the reality of where you're at now, right? Let's look at your approval and where you're at now, right? And let's work through that, because I'm going to prove to you in 6 months doing our model that you're going to be able to get more for less. It's just the cost, the opportunity cost is going to be 6 months of your time in making this do what it's going to do for you. But that's how we're breaking ground nationally, right? Because we work with mortgage companies and real estate companies nationwide on this concept and bringing affordable housing to the masses, because there's variables we can't control, but there's variables we can control. And that's where I'm focused on, is where we are now, where I can take a real life scenario and turn it into something much better.
I am excited to announce that the Josh Carr Show is on We the Free. We the Free is a conservative streaming platform. It's not like the wokies over at The Mouse. I'm not going to say their name because they'll come after me. Not like big tech. They're not going to censor the show. Happens a lot more than you'd think. They have fantastic political commentary. They've got a lot of Second Amendment content, new movies every single month. So go check them out right now. The link is in the description below. Thank you so much for watching this episode, everybody. Please like the video so other great patriots like yourselves will see it. And you can tune in every single weekday at 6 p.m. Eastern for the live show, or you can watch another video right here